Business News, we're news for business people.
Good morning, you're watching Daybreak on Bloomberg Quint Live. I'm Alex Matthew and here are the headlines on the last trading day of 2017. Asian markets are off to a mixed start but are set to cap off the best year since the global financial crisis. A massive fire broke out in Mumbai's Kamla Mills compound and has claimed the lives of at least 14 people and 10 others have been injured. Mukesh Ambani's Reliance Jio Infocom is all set to buy spectrum, towers and other wireless assets of Reliance Communications owned by younger brother Anil Ambani. And capital market regulator SEBI has imposed a 10% cross-holding cap for credit rating agencies and mutual funds. And that's just one of the slew of decisions that was taken at its board meeting on Thursday. But on to international markets now, and US stocks rose amid thinned out trading between the holidays. The Dow set a record close and looks set to end the year with 6 full weeks of gains for the first time since 1954. The S&P 500 rose 0.2% with utilities and telecommunications leading advances. The index closed within 0.5% of its all-time highs that were hit on December 18th. The S&P was also tracking for weekly gains as of Thursday's close, and if that happens, the index will close out the year with 6 straight weeks of higher trade for the first time since 1971. Interesting stats there. But let's take a look at the Asian markets, and they've opened mixed in early trade, with the Nikkei trading about 0.2% higher. The last I checked, the Australian benchmark was trading lower. But on to the Indian market now, and Darshan Mehta joins me now to set you up for the day's trade. Darshan, last trading day of the year, how's it looking?
See, Alex, at this point of time, the equity markets look rather muted. The focus is more on the commodities market. If you're looking at what's happening with the SGX Nifty, you can see that it's absolutely muted in trade. 10,500 is where the futures are trading on the Nifty. It's down by 6 points. So nothing much happening as far as the equity markets are concerned. Even most of the ADRs ended with positive bias, but except for Vedanta, which was up almost over 3%, the others were rather muted. Counters like ICICI Bank ended up almost 1% higher. You also had HDFC, which was down, which was up almost 0.7%. Tata Motors was weak; it was down close to 1%. Now, as far as crude is concerned, yes, the party continues its gain for the second straight day. It gained almost 0.3% overnight, and the WTI is nearing the $60 barrel per mark. Brent is nearing $67 barrel per mark, and it's head for the second straight week of gain. So that is something that's happening as far as crude is concerned. Even if you're looking at commodities, strong close for the base metals on the LME. Just take a look at some of the metals. Nickel was up 2%, aluminium 1.5%. Tin was up almost 1%. Lead was the only one that was down in trade. So most of the other metals managed to pull up in trade yesterday. Even as far as Shanghai is concerned, most of the metals are trading strong. So you be it your aluminium or iron ore or copper or rubber, all of them are trading with a positive bias. So that's the cues as far as as far as commodities are concerned. On the gold front, it trades muted after a 6-day rally. It's not trading majorly in the negative. It's trading absolutely flat in trade. Flows. FIs were net buys yesterday. They bought in almost 560 crores in the cash market. This is the provisional data. DIs sold in almost 777 crores in the cash market. Now, if you're looking at a month-to-date basis, the FIs have net bought almost 7,600 crores in the cash market, and DIs have bought in almost 7,700 crores. So net buy of almost 15,000 crores coming in the last month of the year. As far as the Nifty is concerned, for the second day in a row, the Nifty was down in trade, but it's a muted drop that's happened on the Nifty. Metals and real estate stocks did manage to rally, and PSU banks were the ones that actually did not move in trade. They were the ones that were the weakest. Now, if you're looking at the Nifty was down 12 points. What contributed? Metals and banks, so HDFC Bank, ICICI, Hindalco and Vedanta contributed. PSU banks, SBI was weak in trade, Axis, Kotak was weak in trade, HDFC. So financials on both sides of the spectrum, but a rather muted close that we saw on our markets.
Right. Darshan, you're also going to tell us what the F&O space looks like in the last trading day of the year.
Yeah, so basically, if you're looking at the F&O space, rollovers were much stronger this time around. If you're looking at the Nifty ended above the 10,517 mark. This is the futures. The spot ended below the 10,400 mark in trade. So this is the Nifty scene. Even as far as the Bank Nifty is concerned, you could see it ended absolutely flat above the 25,500 mark in trade. Now, rollovers have been strong both on the Nifty, on the Bank Nifty, on the all market rollover. So overall, rollovers have been weak. The VIX was cooling off. It's back to levels of close to 12 at this point of time. The other factors that you have to watch out is the PCR. The PCR has actually come off from levels of 1.59 to 1.54 currently. There are no stocks in the F&O band, but let's take a look at where the positions have been taken as far as the Nifty is concerned, and you can get an indication. This is the open interest change that is happening at levels of 10,200, 300 is where the maximum put writing is happening. This is where 10,400 and 500 is where there is mixed set of cues that are coming in. So it seems that it will be range bound between the 10,400 to 10,600 mark in trade. So this is where the positions could actually happen. Now, in terms of stocks that you have to watch out for, Oil India saw a massive open interest build up of 25% of 84% on the long side. You have Repco Home, which was down in trade but on high open interest build up. And finally, there were other stocks like Reliance Communication. That one was up almost 7% at the end, but that saw open interest build up of almost 1%. It was important to highlight it because of the price move that happened. No stocks in the F&O band this time around.
Thanks so much for that, Darshan. Let's take a check on the rupee in the bond market now. Saloni Dhanuka joins us now. Saloni, what do you have for us?
Good morning, Alex. So the rupee yesterday made an impressive recovery after early fall, and it ended 7 paise higher at 64.08 levels against the dollar. Now, after a relatively steady start at 64.15 levels, the home currency suddenly turned volatile and weakened by 15 paise to touch an intraday low of 64.28 levels against the dollar on the back of concerns that government's additional borrowing this financial year may breach their fiscal deficit target for the first time in 4 years. Now, the broad-based dollar weakness overseas also supported the recovery in rupee. Having said that, the dollar index yesterday ended lower for the fourth consecutive session. It ended 0.5% lower at 92.60 level, its lowest level in over a month. Conversely, the common currency euro continued its winning run against the dollar and ended near 1 month high, thereby emerging as one of the best performing currencies so far this year. Coming back home, dollar rupee is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade. Moving on to the bond market, government's decision to borrow additional 50,000 crore has spooked the bond market, thereby driving up its borrowing cost, and hence we have seen that the 10-year bond yields have jumped 18 basis points to end at 7.4% yesterday, its highest level in over 17 months. And mind you, bond yields has surged over 88 basis points in this financial year. Also, global funds decreased their rupee debt holdings yesterday. They reduced their bond portfolio by approximately 45 crore. Alex.
Thanks so much for that. Let's move on now, though, and go to the commodity space. Jayesh Khilnani joins us. Jayesh, it was broached earlier in the show about the positive cues for commodities. That's essentially the focus today.
Morning, Alex. That's right. Let me start off with the base metals, which have seen a stellar rally come about for themselves. So if you have a look at the index, the LME base metal index, that has extended its rally to 10 days now. Overnight, it closed higher by about almost 1% and is now on track for the third weekly gain of more than 2%. As far as individual base metals are concerned, nickel was up 2%. It was the best performer in trade. The other base metals like aluminium, zinc and tin also surged more than 1%. With the exception of lead, which was the worst performer and declined as much as 0.6%. So positive coming in for the base metals. Gold too has seen some traction of late. So it is, it edged up 0.5% and is now trading very close to the 1300 mark. We are seeing the third straight weekly gain for gold prices. And if you look at the entire year, gold has had a decent year. It is up about 13% for the year, while on the other hand, dollar index is down about 9%. As far as oil prices are concerned, we are seeing WTI, hover around the 60 mark. Now, this is, it has gained nearly 2% for the entire week. But the cue really that we have to watch out for is the inventory data which came in. Now, remember yesterday we were expecting an inventory decline of about 6 million barrels. That has not come in line. The actual data reported is to the tune of 4.6 million barrels. So we'll have to wait and watch what comes out in 2018.
Right. Thanks, Jayesh, for that. And that essentially wraps up everything that we had to tell you about the markets. But moving on to the big news updates from last evening. First up, Mukesh Ambani's Reliance Jio has agreed to buy spectrum, towers and other wireless infrastructure of his younger brother Anil Ambani's debt-laden Reliance Communications. Arcom is selling assets to repay its lenders. Remember, the two companies have not disclosed the acquisition value, but Anil Ambani had earlier said that the assets there were worth 25,000 crore rupees. The deal would include a cash payment and a transfer of deferred spectrum installment. Here's a report by Sajit Mangat that gives you all the relevant information.
As per the press release given by Reliance Communication, what we understand is that the entire spectrum assets, which includes the deferred spectrum liability, the fiber, optic fiber, the tower, and the media connecting nodes, which are there for Reliance Communication, all four assets would be sold off or transferred to Reliance Jio. Though the consideration for the entire acquisition is not known, but Anil Ambani 2 days ago had indicated that these assets are valued at close to 25,000 crores, and this includes 10,000 crores or roughly 10,000 crores of deferred spectrum liability. And so in reality, if you take that into space into consideration, the total cash outgo could be in the range of between 12 to 15,000 crores, which would go to Reliance Communication. Reliance Communication has already indicated that the entire amount cash which they would be getting would be used to repay the entire debt. Remember, as part of the entire restructuring plan which was announced 2 days back, Anil Ambani had indicated that 25,000 crores will come from wireless assets, 10,000 crores would be assumed into SPV for the DAKC real estate property, and the new Arcom would have a debt of nearly 6,000 crores with an enterprise value of 15,000 crores. So there would be some strategic investor which also will come in, minority investor which might come in Reliance Communication, which is the new Reliance Communication. So this is the thing as of now. The entire restructuring or transfer of assets is expected to happen in a phased manner between Jan to March 2018, and that's a time frame even Anil Ambani had indicated 2 days back, and this is subject to regulatory approvals and all statutory approvals.
Well, that essentially sums up all the important and relevant updates on that particular deal. But if you want more information, do log on to the website and you'll find more information there. But on to the other big story. Come October next year, you will be allowed to trade both in commodities and equities on a single platform. Market regulator SEBI in its board meet on Thursday approved the convergence of both stock and commodity exchanges. Sajit Mangat also filed this report on the developments.
The board of SEBI passed new set of guidelines on Thursday. Among the guidelines that was passed involved a new framework for mutual funds and credit rating agency. SEBI has said that from now on, the cross-holding of credit rating agency would be capped at 10%. A shareholder which has a significant stake in one credit rating agency will not be allowed to acquire significant stake in a second credit rating agency, and he or she will not be provided any board seat as well on the credit rating agency. The board has also looked at strengthening credit rating agency by enhancing the net worth of the company from 5 crores to 25 crores. With respect to mutual funds, SEBI has again brought in a cross shareholding cap there, where mutual funds, a mutual fund or sponsor in one mutual fund cannot hold more than 10% in another mutual fund. Further, any sponsors who currently hold such thing are given a time frame of 1 year to bring down the stake below 10%. The classic case in point would be UTI mutual fund, where all the four sponsors have their respective mutual fund AMCs, and as a result of which they would be required to bring down the stake to below 10% and vacate their board seat in the next 1 year. The third big thing which has come out from the SEBI board meet is the approval for the universal exchanges. This is something which has been in the works. In the first phase, SEBI has gone and integrated the brokers, which is stock brokers and commodity brokers. In the second phase, they are allowing equity stock exchanges to offer commodity products and commodity stock exchanges to offer equity and derivative products. This is something which is expected to come in by 1st of October 2018. SEBI would be looking at amending some of the SCRA guidelines and regulations so as to enable this thing to happen. In the meantime, exchanges will have to prepare themselves so that they are able to bring in new products, new indices, and this next 10 months would be something which would be a preparation time for the exchanges to ensure that they enter this they get these products approved with SEBI and they enter the commodity segment, and commodity exchanges enter the equity segment, vice versa. So these are some of the major things which came out from the SEBI's board meet which happened on Thursday.
Now, speaking about the decision on cross-shareholding in credit rating agencies, SEBI Chairman Ajay Tyagi said that the purpose of the move is to bring in some governance structure to rating agencies. Listen in.
Credit rating agencies where decisions have been taken about the governance structure and shareholding pattern in credit rating agencies. Some of the items, some of the issues being that no cross-holding allowed between the credit rating agencies, and any substantial holder in one credit rating agency also not allowed to hold substantial holding, that is 10% or more in the other credit rating agency, and no board seat also within one credit rating agency to have in the other agency. Net worth requirements also, it has been enhanced from 5 crore to 25 crore, and the existing ones have been given a period of 3 years to do that. Then any rating which is given by a credit rating agency to any instrument, that the life of that, in case it needs to be changed, it will be 50% of the life or 5 years, whichever is later. So that is additional flexibility which has been provided. The idea is that credit rating agencies, being important regulatory functionaries, have to have some governance structure, and so that was the purpose, and so these are the things which have been approved by the board.
The SEBI chairman there. But moving on, the Insolvency and Bankruptcy Amendment Bill was tabled in the Lok Sabha yesterday. The bill seeks to enact as law the changes articulated in the ordinance that was promulgated on the 23rd of November, which made promoters of non-performing assets ineligible to submit resolution plans. Now, it's important to understand the differences between the ordinance and the bill that was presented in Parliament. The amendments in the bill slightly narrowed the scope of ineligibility of promoters and concerned parties. It also gives ineligible promoters of non-performing assets a 30-day window to pay their dues and become eligible to submit a resolution plan. It excludes asset reconstruction companies, alternate investment funds and scheduled banks from the definition of connected persons. This is done so as to protect them from becoming ineligible in the resolution process. And finally, the bill provides some relief in cases where the sole bidder has been rendered ineligible due to outstanding debt. Bloomberg Quint's Menaka Doshi caught up with Shardul Shroff, the chairman of Shardul Amarchand Mangaldas, to get his perspective on the bill.
By virtue of the clarification that they have given in 29 capital AJ, it's quite clear that they link the connected person to two kinds of persons, either the promoter, persons in management or control of a resolution applicant, or alternatively a promoter, person in management or control of the corporate debtor during the implementation of the resolution plan. So in a sense, they have sort of narrowed the scope down, and they have also clarified that a bank, an ARC or an AIF registered with the SEBI are not covered by the explanation 3. So there is a greater clarity now, and I think that's good.
The bill seems to provide an explicit 30-day period for the ineligible promoter. or ineligible corporate debtor to be able to pay the overdue and become eligible. That did not seem to be the case, if I remember correctly, in the ordinance. Do you think this gives a window of opportunity for promoters, let's say, of companies like SR, etc., to be able to work something out with their lenders, pay the overdue amounts, and then be able to become eligible to participate in presenting a resolution plan?
See, no, I would read this a little differently, because the provisos are essentially dealing with those people who are not qualified resolution applicants but had filed for a resolution, and because of the introduction of the ordinance on 23rd of November became disqualified. So in those particular cases, what section 30 subclause 4 has provided is that where you don't have any eligible bidder, then you can ask for fresh applications so that you can have an applicant who can take the company. And it further says that that period that you will have is not more than 30 days, and in any case you cannot exceed the overall time which is prescribed, that is 180 days or 270 days, as the case may be.
Talking about the other ineligibility criteria, especially H, which pertains to those who have executed an enforceable guarantee in favor of a creditor in respect of a corporate debtor, against which an application for insolvency resolution has been made. That language seems the same. There was a lot of grumbling about that when the ordinance was promulgated. They haven't changed that. Do you think that might continue to pose a difficulty?
Yeah. See, the reasoning, there has been now a judgment of the Calcutta High Court explaining this particular clause. And essentially what it says is that this relates only to an invoked guarantee. So somebody who has given an enforceable guarantee and which guarantee has been invoked, then such a person is ineligible to make a bid because he's already out of pocket for that amount which has been invoked.
I can't recall if any of the large accounts have hit the 270-day deadline. Do you know from within your client pool whether people are fearful that they're very close to the 270-day deadline and the complications introduced by the ordinance or the bill, will actually prompt them to move towards liquidation because they don't have much clarity?
No, on the big 12 which were brought in by the Reserve Bank of India's ordinance and the changes made, they are almost all near the 180-day. So they have not gone into the 270-day framework. They will have this ability. So you would see situations where the big 12 have got the flexibility of using this extended term.
Well, on to the stock of the day now, and AMULYA Leasing and Finance is the stock that we're talking about. Let's head across to Nikki Mirchandani for more on that. Nikki?
Hi Alex, the stocks are expected to have a positive reaction for the day. Ace investors have checked into the stock while promoter has actually exited the stock. So you have Param Value Investment which has bought 8% stake in the company at a sum of around 22 odd crore. Then you have the Bansali family which has in all taken a 3.8% equity of this company at a sum of around 11 odd crore. In other investors you have FIL Investment Mauritius which has bought a 9.3% stake of the company at a price of at a sum of around 26 crore. Vertex Suppliers has bought an 1.2% stake. Ajay Kumar Rohit bought 2% stake in the company, and lastly we have Fidelity India Fund which has bought an 0.7% equity in this company. With this, the stake has been sold by the promoter. That is a 35.3% stake has been sold by the promoter at a price of around 98 crore. And with this, promoter has actually exited the company. If you look at the shareholding pattern, our promoter was holding around 35% back in September 2017, while public shareholding stood at 65%. Just to give you a little rundown about what the company is, it's a holding company of Apollo Pipes, but now with the given scheme of amalgamation, the company's name has been changed to Apollo Pipes. Though it was incorporated with a vision of microfinance institution, now it is into the manufacturing of PVC pipes, fitting, etc.
Right. Thanks so much for that. Nikki, do stay with us though. You're also going to tell us about the big brokerage calls of the day.
Sure, we're covering actually insurance bit of the company here, and we have three. Motilal Oswal has actually initiated the brokerages here. I'm so sorry, it's HDFC Security which has initiated a report on India's life insurance sector, which is poised for strong growth. It says that this is going to be driven by the financialization and savings post your demonetization, and feels that this segment is largely underpenetrated, and the rising awareness towards insurance would be the driver for this sector. It has initiated a coverage on SBI Life, ICICI Pru and Max Financial Services. Now for SBI Life, the target price is set at 810, which indicates an upside of 16%. Now robust branch network along with the parental advantage is what works for your SBI Life. It has also initiated a coverage on ICICI Prudential with a target price of 465 per share, indicating a potential upside of nearly 19%. The large focus of ULIPs for this particular insurance company is working towards its favor. Last, we have the target price of Max Financial, which has been set at 665 per share, indicating a potential upside of nearly 11%. However, it has suggested some sort of risk coming into the target price. Normalization of income tax is a risk, and increasing it to tax, the increase of the tax rate to 25% is also is expected, could lead to a target price falling by 10 to 12% according to the brokerage.
Right, we leave it at that. Nikki, thanks so much for wrapping it up for us. But let's move on to the stocks in news. Shraddha Babla joins us now with an entire list. Shraddha, the last list for this year. What do you have for us?
Well, yes, to start off with Lupin, which has received an approval for a drug which is used to treat psoriasis, but a very small one. That is the bigger development, and the negative development for Lupin is that pharma company Nostrum has received a US FDA nod for Fortamet, which is one of the biggest drugs for Lupin. So negative development seen there. Bank of Baroda will be in focus after it said it will buy out its joint venture partner UniCredit's 51% stake in Baroda Pioneer Asset Management Company. So their stake will increase to 100% now. This was done to meet regulatory requirements, and the bank may consider inducting a strategic partner going ahead. So that's another name that you're watching. JP Power, on the back of a ET report which says that Brookfield Kotak have bid for JP Power's assets, and the deal could close at an equity value of 3,500 to 4,000 crores. We are also tracking Centrum Capital, which will consider fundraising via securities on 3rd January. Besides that, you'll also have some ARCs like companies like Edelweiss and JM Financial, which will be in focus because they run ARCs. Now, SEBI board yesterday approved trading of security receipts that are issued by ARCs, so keep an eye out on those two names. A ET report which has said that L&T has won a 1,000 crore contract to supply smart meters in Uttar Pradesh, and lastly, on the back of bulk deals, we're also tracking Dredging Corp, where Vijay Kedia Securities bought 0.6% stake in the company. Stock was already up about 16% or so yesterday, so we might not see a sharp reaction there. But Alex, those are some of the stocks to watch.
Thanks so much for that, Shraddha. And there's clearly so much to talk about on this last trading day of the year, but there's also a lot of stories, including the ones that we've talked about, that you'll find on the website bloombergquint.com. I'm only going to tell you about a couple though. First up, you have the Lok Sabha on Thursday that passed a bill that criminalizes instant divorce. It's triple talaq. For the individual that, and essentially it has a 3-year imprisonment for the individual that initiates it. This is after the government rejected an overwhelming demand from the opposition to refer the legislation to a parliamentary standing committee for detailed consideration. Now, the other big update from last night, in fact, post 12:30, is that at least 14 people were killed and as many as 10 were injured after a major fire that broke out in a building in Kamla Mills compound in Lower Parel in Mumbai. The fire broke out shortly after midnight on the 3rd floor of a 4-story building on Senapati Bapat Marg. More information on that coming in, and we'll keep you posted on that, of course. But that's a wrap on this edition of Daybreak, and in fact the last Daybreak of this year. All you need to know is up next. Do stay tuned. This is Bloomberg Quint.